Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, well, the FOMC has come and gone, and as I mentioned in the webcast yesterday, look, risk-off events very rarely arrive by appointment. And what they did yesterday was take it right back to the area that they were looking at before the close on Tuesday, which was 31. 31 was a daily pivot. Let's look at, I've got it on an hourly. You can see, here's your close on Wednesday. There's the Fed reaction low, okay? The jumping off point for the Fed was about 47.5. We pushed down hard to 31. And it goes back to what I've been saying for a very long time. Look, we may end up ultimately going down here, but at least on the initial reaction, it was going to be they raised rates. Oh my God, we go down. And then everybody kind of looks around and goes, wait, I'm not dead. Well, I'm not dead either. I got all my legs. I got my legs. I got my arms. I got 10 fingers. I got 10 toes. I still own my house. And, all right, let's buy them. And it's, they pushed it up. There was nothing in the press conference to dissuade anybody from continuing to push it up. And they took it all the way up to the mid-band. Had to move that line. The mid-band this morning is 67.61. Yesterday it was 68 and change. You got the monthly pivot up there at 64.80. Now it retraced a little bit off of that, which is what you would expect. It has found support at 56. They took it back up, made a higher high, and we're pulling back, and I'll be interested to see if monthly pivot can be support again. When you get that on a 15-minute chart, you can see the reaction low there. You've got the daily pivot coming in today at 53.25. So on a daily chart, you got the big move down. You hit the third standard deviation band, and you've got a bounce up to the area of the mid band. If you're a bear, I suggest very strongly that you have a big day today, because if you don't, you're going to give up the middle band again. And now the one unknown that was kind of keeping folks on the sideline from thinking maybe Santa's not coming or any of the other nonsense that you hear, that's out now. That's done. Rates are raised. The sun is going to come up this morning, although not here in New Jersey apparently. But, the sun is up, and there's not much keeping folks from just walking this market up for a couple of weeks. So the bears need news, and they need to knock it down. And they need to hold middle band as resistance and try to get back a lot of this ground that's been lost over the last couple of days. But they've accomplished nothing until they break 31. 31 was the reaction low yesterday, as I said, and it was where they started the walk up on Wednesday. So right now, we are flat. We were long the walk up. We did some shorts yesterday. The Fed happened. We got long on the, around the reaction low, 35-ish. We held that for a while. We were short for a little bit. And then, I ended up getting out of everything into the close, and I'll start today fresh. But, we got a lot of people that are still long, and, they've just got runners. But whatever you're doing, control your size, control your risk. Don't get too married to one side or the other. These are not the bulls of 2013, and it doesn't take much to get them out of the pool. But what I'm saying is, seasonally, if the bears are going to try to, push against the grain here, they're going to have to get started today. If the bulls can do, another 10, 20 handles up, then you have these highs that start to get magnetized, up in the 2105, 2106 area, which has always been a biggie for us. And it's just going to be kind of, it's going to become a self-fulfilling prophecy. So we're only trading 2066 halves. You're at the mid band. If you're a bear and you want to push back, this is the day you really got to do it. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.